Retail stocks have been taking a hit this week, down about 5% in the past 3 days for the S&P Retail Index, and actually at 52-week lows. That's not the only reason, though. It's also a mix of declining consumer confidence, lower spending power, and a tariff overhang, I should say. That's according to my next guest, although there are a few names she still likes. Dana Telsey is CEO and Chief Research Officer of Telsey Advisory Group. Dana, it's good to see you, and what a mess.
Exactly. What a mess. As you were just talking with Eunice before, you take a look at the stock prices of the consumer sector, more of them are at or near their 52-week lows given the past few weeks. And the other thing that's really been impacting the retailers is the fact that, forget the fourth quarter, because that's in the rear view already. You look at the first quarter guidance that so many companies have given, it's below consensus, with the guidance for the year anticipating or acquiring a significant pickup. Now, you should always see a significant pickup in the back half of the year, but this is even more than expected in terms of what companies need to deliver. So whether it's tariffs, whether it's about inflation and the cost pressures that are out there, whether it's the fact that the R word is being bandied about in terms of recession, that feel-good factor is not here in retail right now.
Are there buying opportunities? We look at this chart, this wall once again, and it's a reminder, we've got companies like Gap doing incredibly well right now. Home Depot had a decent earnings report and stock reaction, same with Lowe's. Best Buy was taken down because of tariff commentary, but not because of an actual impact there. So where would you say are places that investors should go, or should people be on the sidelines until the dust settles a little bit?
There are definitely some companies to look at that are attractive down here near the lows. Look at Bath & Body Works, for an example, which is trading at 8 times forward, where the CFO just talked yesterday and mentioned the fact that the first quarter guidance for revenues looks to be coming in at the upper end of the range. Collaborations, product newness, and innovation matter. Brand leaders make a difference. I would say that some of the other names that are interesting, you look at Warby Parker, who just announced the shop-in-shops with Target, and that is in addition to their 40 new stores they open each year. So that's going to be another driver of sales growth. Of course, value matters, and that's the off prices that are out there and the benefits that a TJX and a Burlington could see. And I think you look at other names that are trading down near the lows. If you take a shot at some of these names, you look at Abercrombie & Fitch, where Hollister is still up 24%. They said the month of February is positive. As we go through the anniversarying of the significant success of the Abercrombie brand. And then, like you mentioned, Home Depot and even Dick's Sporting Goods, who said yesterday that, yes, while they adjusted guidance, their customer is still healthy in moving through and looking at those activewear categories. So there is buys out there that are interesting.
I guess my final question would be, from your point of view, as you watch your metrics, traffic, you listen to and talk to these different management teams, even hearing from the airlines this week about, when Delta says there's been like this sudden sharp drop in bookings, can you tell us whether you're picking up on something broadly slowing down with the consumer?
I think overall, definitely what you've seen more uncertainty. You've heard about it from some companies in the month of February being weak. You're seeing it in terms of some of the traffic numbers. They've been down week after week in some of the mall-based traffic data and outdoor strip center data that we've been getting. So there is a pause out there, and it's being watched closely because look at consumer credit and what we've been seeing there. It's to be watched carefully, and I think the first quarter overall, we're going to need to see an acceleration. Easter's later than usual. The weather's been unseasonal, and there's been more headwinds than tailwinds for the sector lately.